Good afternoon, commissioners and ex officios. For the record, I am Jess Losi. I'm a special agent supervisor in the Regulation Enforcement Unit. And today I'm going to be giving a brief presentation on anti-money laundering. Next slide, please. That'd be appropriate to begin with a little bit of history and terminology related to anti-money laundering. So to start, in 1970, Congress passed the Bank Secrecy Act, also known as the BSA. It involved the first laws to fight money laundering in the United States. It requires businesses and card rooms, casinos to keep records and file specific reports, which I'll discuss later in this presentation, that are determined to have a high degree of usefulness in criminal, tax, and regulatory matters. These filings by businesses are used heavily by law enforcement agencies to detect, deter money laundering related to unlawful activity. Next slide, please. So the Financial Crimes Enforcement Network, also referred to as FinCEN, is a bureau of the U.S. Department of the Treasury. FinCEN's mission is to safeguard the financial system from illicit use and combat money laundering and promote national security through collection, analysis, and dissemination of financial intelligence. Next slide, please. Title 31 is the codified regulation for the Bank Secrecy Act that gives FinCEN the authority to implement, administer, and enforce compliance with BSA regulations. And this is what card rooms and casinos fall under, this regulation. So next slide, please. So getting into a little bit of anti-money laundering in Title 31. So Title 31 applies to casinos and card rooms with any gross revenue or gross receipts greater than $1 million in a year, and it designates them as a financial institution. And there's certain reporting requirements that card rooms and casinos have. Two of them listed here are the currency transaction reports and suspicious activity reports. Currency transaction reports, often referred to as CTRs, involve transactions of cash in or cash out greater than $10,000. And I'll go into a little more detail on that in another slide. Suspicious activity reports, also referred to as SARs, involve suspicious transactions greater than $5,000. And in a slide coming up, I'll go into what card rooms look for with regards to suspicious activity. Title 31 requires card rooms and casinos to know their customers. They do this by a number of different means, but it involves them determining players' names, date of birth, social security numbers, addresses, and Title 31 requires card rooms to develop and implement a written anti-money laundering program. Next slide, please. So with regards to the anti-money laundering program, at a minimum, card rooms are required to have internal controls designed to prevent money laundering and ensure compliance with the Bank Secrecy Act. They're required to train card room personnel. So this would involve card room personnel being familiar with what type of transactions would be suspicious that might generate a SAR, for example, what kind of transactions might generate a CTR that they can relay to other personnel that would file these reports. The program requires the card room to designate an anti-money laundering officer, also referred to as an AMLO. And that particular person, typically with card rooms, is the one that would file CTRs and SARs with FinCEN. The program requires procedures for using all available information to determine the name, address, social security number, and other information of a person, that know your customer information I talked about before. And it requires to provide an inclusion of an automated program to aid in the assurance of the compliance. Next slide, please. So currency transaction reports. So like I discussed before, this is a form that card rooms must complete and send to FinCEN. It involves cash in or cash out transactions of $10,000 or more. It can be in a single transaction or it can be aggregated, and it's on or behalf of any particular person. And with CTRs in particular, card rooms have 15 calendar days to submit that form to FinCEN. Next slide, please. Suspicious activity reports, like I noted before, involves transactions of $5,000 or more. It will involve a possible violation of any law or regulation. It can be one transaction or it can be aggregated to that 5,000 or more figure. And as far as reporting timelines, card rooms have 30 calendar days to report suspicious activity reports to FinCEN. Next slide, please. So SARs are required to be completed when the card room knows, suspects, or has reason to suspect the following. So activity involving funds from illegal activity. Example of this could just simply be card room staff overhearing a player that's bringing in cash into the card room that it was derived from illegal activity, let's say drug sales. Activity designed to hide assets from derived illegal activities. Activity to evade Bank Secrecy Act requirements. An example would be structuring. What structuring typically is say you have one player that has $30,000 in chips, and they know that a CTR would be filed on them if they cashed out anything over than 10,000. So instead of going to the cage and cashing out 30,000, they break their transactions into smaller transactions like $9,000 at different points in time. Other reasons for SARs, if there's no business or apparent lawful purpose for the transaction, or if a player or players are engaged in activity simply involving the use of the casino to facilitate a criminal activity. Next slide, please. So here's some examples that are typical in card rooms that might be related, potential money laundering, but also reasons why a card room may complete a SAR on a player or players. So if a player came into the card room with a number of small bills, say 5, 10s, and 20s, and then they requested $100 bills in exchange. So that would be an example where a card room may complete a SAR. Regularly conducting currency transactions just below 10,000. So that relates sort of to that structuring example I gave before. Purchasing chips and then gambling very little and then cashing out. So this is something agents see sometimes on video when they are in card rooms where a player will come in with a large amount of cash, buying $20,000, and then they're placing maybe $5 bets, a couple hands, and then they want to go out to the cage and cash out. That would be something a card room would do a suspicious activity report for. Using other patrons to cash out chips, supplying other patrons with cash to purchase chips, using IDs that appear to be forged or altered, or using the card room purely for its financial services. So just to add on to this, because we're ending to the question phase, the Regulation Enforcement Unit and then the agency as a whole does have a compliance program where we do inspections within card rooms to verify various aspects related to FinCEN. So agents are looking at CTRs, they're looking at SARs, verifying card rooms are appropriately filing those on players. So next slide, please. That concludes the presentation.